In a surprise move this week, Pidilite, the maker of Tootega Nahi brand Fevicol, is entering into the lending business. Pidilite is doing so by acquiring a promoter group firm called Pargrow Investments. That's correct. The makers of adhesives, paints and chemical construction material are now entering into the loan segment. Pargrow Investments would be acquired at a cost of 10 crores. The newly created NBFC will invest 100 crores over the next 2 years in tranches to build the new business. A few weeks ago, Mahindra entered into retail lending business by acquiring a majority stake in the RBL Bank. Even the great Reliance demerged its financial services from the main business to form a separate company called Jio Financial Services. Now an adhesive maker venturing into loans? Isn't that surprising? Well, as per industry insiders, these loans are catering to a different ecosystem altogether and is an attempt by Pidilite to test the lending waters in India. Sources believe that through this financial arm, Pidilite wants to nurture its vendor and contractor ecosystem and expand the reach of its core business. As of now, the loans are exclusively targeted towards contractors and vendors involved with Pidilite in various capacities and in its ecosystem. Bharat Puri, the MD of Pidilite, in a press statement said, "The Pidilite ecosystem consists of a large number of users and dealers. These users could be furniture contractors, plumbing contractors, masons, koti contractors, tile layers, etc. Our loans will remain restricted to the Pidilite ecosystem and service, where we believe we have a competitive advantage. We will start with piloting this in one geography, understanding whether our assumptions hold, how it works for us, and then come back and see how to scale it up if we want to scale it up." Pidilite wants to give out small ticket loans to its vendors and contractors. And to get that right, the company is backed by enormous amounts of accurate data. Data which would answer questions like what kind and how much loan vendors might need, the repayment mechanism, and crucially, whether this loan will help Pidilite get an extra mile penetration in the market or not. It would be interesting to see what would be the rate of interest Pidilite charges on these loans. As of now, it is highly unlikely that someone outside the Pidilite ecosystem will be able to avail the loan. But this possibility cannot be denied in the future. And if and when that happens, it would be a case of yet another corporate entering into the financial lending space. This development forms an interesting part of the bigger equation. In an era of high interest rates charged by banks, more and more corporations are entering into specialized NBFC space, are giving out specialized loans to specialized people for specialized requirements. Where does that leave traditional lenders like banks and financial institutions, which offer a lot of scrutiny? As per recent reports, small loans are turning into big problems for banks, and the RBI has been extremely cautious about it. Will too many lenders in the market dilute the credit worthiness of the ecosystem? Or will it make lending more accessible and reachable? That is the big question which regulators would need to assess and provide answers for.